Cities that could be heading to a housing crash. Hey, I'm Sharon, your favorite Miami real estate with Home Miami Realtors, and today I've brought you a recent article of some cities that, according to Go Banking rates, are in risk of a housing crash. So let's head to it. Like I said, according to Go Banking rates, a crisis is predicted for 40 cities in the United States, and the main cause is said to be the rise in demand and the lesser inventory accompanied with higher inflation rate. Not only that, but Florida has just made its way to the list as well. According to Yahoo.com, the finance section, and the research from Go Banking rates, the median home prices have increased by 16.9%, which is a climb up to $346,000 than the previous year, and that's the highest mark recorded since 1999. In their study, they collected all data on and up to date as of May 23rd of 2022. Further, the article says that the recent hike in interest rates, which according to the economist, will slow home sales in the coming months of 2022. Even though there are cities all around the nation in this list, there are 40. I'll talk about the cities in Florida. According to this report, Jacksonville, Florida have a total housing units of over 348,000 with a percentage of mortgages with 30 to 89 days delinquent of 0.8%, percentage of mortgages with over 90 days delinquent of 0.6%, percentage of homes for sale that are or have been foreclosures in 46.56%, and homeowner vacancy rate stood at 2.0%. Moving to the next city, Gainesville, Florida, having the total housing units about 51,000. The percentage of mortgages with 30 to 89 days delinquent is 0.7%. Percentage of mortgages of over 90 days delinquent is 0.6%. Percentage of homes for sale that are or have been in foreclosure is 21.28%, and homeowner vacancy rate stands at 3.6%. Miami, Florida also joined the list with over 180,000 housing units, 0.7% of mortgages with 30 to 89 days delinquent, 90 plus days mortgage delinquent came up to 0.6%. Percentage of homes for sale that are or have been in foreclosure is 69.72%, while the rate of homeowner vacancy is 2.2%. Do you think this is accurate? Do you think we're heading to a housing crisis? I want to hear from you. Let me know in the comment section below. But who are these people and how are they calculating this? Is this even true? Let's discuss the factors which, according to Go Banking rates, are the reasons these cities are predicted to have a housing crisis in near future. According to its methodology, they covered the 200 largest cities nationwide and built their research on four main factors. First, they collected the mortgage percentage of 30 to 89 days delinquents from the MSAs as a source from the Consumer Financial Protection Bureau. Factor 2 is 90 plus days mortgage delinquents from the same source, and also they collected the homeowner vacancy, which is the factor number 3, and rental vacancy rate, factor number 4, from the 2020 American Community Survey by Census Bureau. This chart shows the rental vacancy rate with comparison between the second quarter of 2021 and 2022. The highest vacancies were observed in the South region, standing at 7.0 this year, and Midwest. That's pretty interesting because here in Miami, it has been on fire. The rental market within those numbers, I don't know about that. And here the homeownership rates by region, which in 2022 shows same or higher numbers than 2021. After all the data is collected, these factors were scored, and the cities which had the highest score were considered most likely to be poised by the housing crisis. Then these 100 cities were re-ranked and moved to the next step while collecting the national foreclosure data as well by Realty Track, which is the method's factor 5. Now that we know how they calculate all of these, according to Go Banking rates, home sale price rising has become a reason for the home sales decline, but also the increase in mortgage rates. You know that every month I do the Miami housing updates, and according to the latest data from July from the Miami Association of Realtors data, Miami-Dade's June 2022 total home sale, although decreased compared to June 2021 from 4,057 to 2,891 was considered the third best June in history despite the increase in mortgage rates. Even though both median single-family home prices and condo prices increased in June 2022, we had our third best June in history. As far as mortgage rates, from the beginning of this year, we saw an increase of mortgage rates with an average of 3% to 6% in 6 months. Further, after all the inflation, the rates reached its highest mark this year till now in June to 5.81, which is showing a decrease of 0.59 points in August, dropping to 5.22. This chart and the next ones are from Keeping Current Matters. I love them. They have valuable information that they always share. Shows the different recessions which occurred in the United States during the years with dropping mortgage rates. The 1980s recession with the duration, the 90s, the 2000s recession, the Great Recession, and the last one in 2020. Definitely we're seeing more headlines talking about these, about the recession, and here are some headlines from different sources from CNN, CNBC, and the Washington Post. But a recession equals a housing crisis, or is the way around? Is the housing the one who affects the recession? Hey, don't forget to download the free resources I have for you in the description box below. Here's another graph with price changes in the same last 6 recessions, with something really important that David from Keeping Current Matters said. I'm gonna quote: "Housing is not what is affected by the recession, but it's the other way around. Back in 2008, a recession did not affect housing. Housing affected the recession." Now, here are the mortgage rate projections presented, which were released in July 2022, and these were provided by sources like Freddie Mac, Fannie Mae, MBA, and NAR. The first column displays the quarters of the year. It's 2022 quarter 4, and the very last column displays the average of all 4 sources together. What the experts project is that the mortgage interest rates are holding pretty steady in the low 5s in the next 12 months. However, we have a very important factor here, which is inflation. Kate Rizabek from Keeping Current Matters state that inflation is the enemy of long-term mortgage rates, so we have to continue to watch inflation and all the things happening in the economy around us to get a really good sense of where the mortgage rates are headed and what's going to happen. Here's the home price forecast for 2022, followed by the 7 key industry leaders when it comes to pricing, and these are their latest projections. The average of all these together is 10.3% appreciation for the rest of this year. Yes, it's a little bit more moderate than the record-breaking prices last year, but it continues with the appreciation. We know that buyer demand has decreased, but there is more inventory coming available. The pace of sales is slowing. Yes, this is true, but we still have the demand out there. The buyer demand still outpacing the homes available. And yes, when there are more buyers than the available homes, prices will continue to rise. The only difference now is in a decelerated pace, and this is happening nationwide and in most markets. Here's an important quote from the chief economist Mark Sandy from Moody's Analytics. "I don't think national housing prices will decline in a meaningful way, but there will be price declines across the country." There will be a decline in the housing prices all around the country. However, in most markets, and after seeing the whole forecast and projections, there is a continued appreciation. If we're seeing the projections with the steady mortgage rates and home prices projected to rise, it may be good time for buyers to get back to the market before the home prices continue to increase further, and now even more when we're heading into a balanced market with more inventory coming to the market. After looking at all the information and data provided, what are your thoughts over it? Do you think that we're going to be hit by a housing crisis in the near future? What are you seeing on your market, on your area? I would love to read your comments. You can always hit the thumbs up button and subscribe to my channel to get more videos like this one, but also hit the bell icon to get notified every time I upload a new video, as I'll be bringing more informative videos like this one. Don't forget to be nice and be kind. See you next time.